Welcome to Wealth Hustle 247 podcast, your trusted guide to financial literacy, business innovation, and entrepreneurial success. Learn how to grow your wealth, make informed decisions, and turn your ideas into profitable ventures.
Stop chasing money, start building wealth. Welcome to How to Build a Personal Wealth System in Nigeria. In this podcast, we're giving you the tools, strategies, and insider insights to grow your income, multiply your money, and secure financial freedom starting today. Let's go.
Welcome to the Deep Dive, where we break down essential source materials to give you the core knowledge you need.
And today we are jumping into something incredibly important.
Absolutely. We're doing a deep dive on building structural financial resilience. We're working from a guide that's all about creating a personal wealth system specifically for a dynamic, and let's face it, volatile environment like Nigeria.
And the key word there really is structure. This isn't just about saving a bit of money here and there.
Right.
Our sources define a personal wealth system as a deliberate, integrated framework. It's a system designed so you can consistently earn, protect, grow, and multiply your money.
So it's about making sure your stability doesn't just hinge on the market being good.
Exactly. It depends on disciplined, repeatable actions. You're building financial armor.
I like that, financial armor. So the guide we've studied lays out 10 structural elements. It's really a blueprint to turn wealth from just a hope into a structured reality.
Mm-hmm.
So our mission for this deep dive is pretty straightforward.
Yeah.
We're going to unpack these 10 elements, move through them quickly but thoroughly, so you can walk away with that critical framework.
We're going past the usual tips and tricks. We're getting to the foundational pillars, the things that create, anti-fragility in your personal economy.
Okay. Let's unpack this. We'll start with the foundational steps. The guide really splits the system into 3 big phases: defense, growth, and then maintenance. So let's dive into that defensive structure first.
Right, and defense starts with definition. That's step 1, the vision. You just can't build a system if you don't know what wealth actually means to you.
So what's the end goal?
Is it a specific net worth? Is it generating enough passive income to quit your job? I mean, the guide really hammers home the need for tangible, short-term, medium-term, and long-term goals.
I have to be specific, right? Not
yeah.
just, I want to be rich.
Exactly. You need milestones. The date you want to retire, the exact capital you need to start that business, or, the amount for a generational transfer. That vision is what drives everything else.
Without it, the discipline you need for step 2 it falls apart.
And step 2 is mastering cash flow. This is the absolute bedrock, especially in a high inflation environment.
Okay, what does that mean in practice?
The discipline has to be absolute. You track every single source of income and every single expense. The core principle, and it's non-negotiable in the guide, is that saving and investing must happen before you spend on lifestyle upgrades.
Let's pause on that for a second. Why is that pay yourself first idea so critical in a market with high inflation or, say, currency volatility?
It all comes down to control. I mean, in a stable economy, you can get away with some small mistakes.
Sure.
But in an environment like Nigeria, if inflation is running hotter than your savings rate, you are actively losing money every single day. Tracking your cash flow gives you that immediate feedback loop you need to make every single naira work harder.
So if you don't control the flow, the outside environment will just erode it.
It will erode it faster than you can build. That makes step 2 foundational.
Okay, so once you've mastered cash flow, you move to the first layer of real protection. That's step 3, the safety net, the emergency fund.
Every system needs a shock absorber, and the sources are very specific here. This fund needs to cover 3 to 6 months of your total living expenses.
And where do you keep it?
Critically, it has to be in a highly liquid and secure account. That means you can get to it immediately, no penalties, and no exposure to high market risk. This is what stops a car repair or a medical issue from forcing you to sell your investments.
Now, staying on defense, the guide does something interesting. Before it even gets to earning more, it jumps ahead to step 6, protecting assets. Why jump from 3 to 6?
Yeah, we're grouping them under protection. Think of it this way. Step 3, the emergency fund, protects your cash flow from immediate shocks. But step 6, insurance, protects your accumulated wealth from a catastrophic loss. The guide is incredibly clear on this. Insurance is not a nice to have. It is a mandatory part of the system.
Let's add some real-world friction here. What if you're just starting out and capital is tight? Do you focus on the emergency fund first, or do you start paying for insurance?
That's a great question. The guide implicitly says step 3 comes first. You have to secure that liquid cash floor to handle immediate survival needs.
Right.
But as soon as that's in place, or even while you're building it, step 6 becomes critical. We're talking comprehensive coverage, health insurance,
Yeah.
because that protects your ability to earn, life insurance to protect your family, and asset insurance for your house or business so one fire doesn't wipe you out.
So the cost of insurance is just a fraction of the cost of losing everything.
A tiny fraction. These first elements we've talked about, vision, cash flow, the emergency fund, and insurance, they are all about defense. Once that's solid, then we can shift gears.
Here's where it gets really interesting. We've locked down the defense. Now we build the growth engine. This kicks off with step 4, diversifying income. So how do we stop relying on a single salary?
This is the strategic move. You go from being a single asset, which is your job, to becoming a portfolio of assets that all generate cash.
I like that framing.
The framework insists you have to actively combine multiple income streams. So your primary salary, maybe some business income, a side hustle, returns from investments, passive income. The point is the system can't collapse if one of those streams just disappears overnight.
It's about spreading your personal risk. If the job goes, the side hustle and investments are still feeding the system.
Exactly. And that diversified cash flow leads you straight into step 5, the strategic investment mix. How do you actually deploy that capital?
So what's the strategy there?
It has to be disciplined and balanced. The guide really pushes for a mix of low risk and high growth investments. This lets you capture the upside while staying stable when the market takes a downturn.
Let's get specific on that. What does the low-risk component, the shock absorber, look like in this context?
For stability, the guide points directly to things like treasury bills, T-bills, or maybe some high-yield, very liquid money market funds. These are the tools that make sure your core savings aren't just getting eaten away by inflation in the short term.
Their job is safety first.
Safety and accessibility, they anchor the entire portfolio.
Okay, so that's the anchor. What about the growth engine? The part that actually builds real wealth?
That's the high growth element. And the list is pretty comprehensive and tailored to the regional economy. We're talking mutual funds, local stocks, real estate, which is a huge one, agriculture, and even digital assets, but with a big warning label about risk assessment.
So you need to know what you're doing there.
You absolutely do. The main point is you have to actively participate in growth sectors. You use that stable T-bill base to take smart, calculated risks that can deliver returns well above the inflation rate.
That blend is fascinating. It's like you're building an engine that has both a powerful accelerator and really good brakes.
That's it, exactly. And the balance is always the question. How much safety? How much speed? And that ratio goes all the way back to your vision in step 1.
So we've covered the foundation, defense, and growth. Now we're in the final phase, maintenance and optimization, because a system is only as good as its upkeep. And that starts with step 7, continuous financial education.
If the economy is moving fast, your knowledge has to move faster. And this isn't about generic advice. The education required here is very specific.
What kind of specific?
You have to stay informed about current economic trends, regulatory changes, and local investment opportunities. And crucially, the focus has to be on business models and investment classes that are relevant to Nigeria and, the broader African continent.
You can't just apply a framework designed for Wall Street. Your education has to be local.
It has to be. Which leads us to a really fascinating element. Step 8, leveraging community finance.
This is where traditional wisdom meets modern finance.
It's a key cultural insight. The guide highlights the power of traditional systems like AHO or Isusu. For anyone less familiar, these are basically rotating savings and credit associations. A group of people all contribute a fixed amount, and the whole pot rotates among the members.
And what makes these old systems so relevant today? Why put them next to stocks and T-bills?
They solve 2 massive problems. First, formal credit can be really hard to get. An OSHO is effectively a zero-interest guaranteed loan when it's your turn, perfect for business capital.
Okay, that makes sense.
But second, and maybe more importantly, it enforces the discipline from step 2. The commitment is social. You don't want to let your neighbors down, so the discipline becomes non-negotiable, and you build up a lump sum of capital way faster than you could on your own.
That's a powerful idea, using social trust to enforce financial discipline. But with all this, especially online, comes risk, which is step 9, verification and safety.
This is a huge warning. It's about the danger of information overload and all the fraudulent get-rich-quick schemes you see everywhere. Verification is everything.
If it sounds too good to be true.
It is. The guide mandates that you only use platforms and institutions that are verified and regulated.
And it names the regulators, which is important. We should be clear about that.
Absolutely. When you're looking at any investment platform, you have to confirm they are registered and regulated by the Securities and Exchange Commission, the SEC, or the Central Bank of Nigeria, the CBN. That's your layer of protection.
Okay, so vision, system, growth, safety protocols. That brings us to the final ongoing step. Step 10, review and optimization.
A system that doesn't adapt will fail. Simple as that. Your wealth framework is not a set-it-and-forget-it plan. It needs regular review, probably quarterly.
And you're adjusting for what?
You adjust your goals, you shift your investment mix based on the market, you refine your income streams as your life changes, you get married, have a kid, get a promotion, and as the whole economy evolves, optimization keeps the system alive and efficient.
So it's a constant cycle. Define, defend, grow, and review.
So what does this all mean? The core message is clear. Structure leads to resilience.
Right.
The ultimate philosophy here is that building wealth, especially in a volatile economy, is a marathon. It takes discipline, it takes structure, and patience. By putting these 10 elements into place, you're building a system that's designed not just to survive uncertainty, but to actually thrive in it.
You stop being reactive to the economy and you become the proactive designer of your own financial future.
And that leads to a final provocative thought for you to take away from this. If the goal is formal, resilient financial protection, the kind verified by the SEC or CBN, but getting there requires immense discipline, how might leveraging traditional community finance, like HO, which enforces that discipline socially, actually accelerate the speed at which you reach that first level of formal protection?
A blend of high-trust tradition with regulated formal systems.
The ultimate hybrid strategy.
That is an excellent thought to take with you. Thank you for diving deep with us today.
That's it for today's episode of Wealth Hustle 247. Be sure to follow, like, comment, and share with others. Keep pushing toward your goals, and we'll see you in the next episode.